Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Well, in the past week, the Chinese real estate developer Evergrande continued to wreak havoc on the markets, although deeper problems in China appear to be emerging that may provide as much, if not far greater, threat to the global stability of markets everywhere. Among key markets, the Standard & Poor's 500, which had been actually holding up reasonably well, has slipped and indeed came within 5% of its super growth price. That's 3.5 times adjusted book value, within 5% of the super growth price for that index this morning before rebounding somewhat. The FANGs as a group have not managed to avoid damage, and our Phantom FANG portfolio has not distinguished itself in the past week. The big question is the weak performance of the group, and in particular our Phantom FANG portfolio, going to persist going forward? And what should we expect? But before we take a close look at the FANGs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Let's start with Amazon, and increasingly I am thinking that Amazon may well be the canary in the market coal mine. Now, the stock had set back to its 10-year usual low at its HB2 price. That's 12 times its book value, and had held once again, offering, I think, promise of perhaps another nice advance, which it did the last time it got there. In fact, the last 2 times that it got there. Well, we'll have to see whether the Amazon is providing any leadership or just temporary respite. One of the stocks that, quite surprisingly, in a sense, not only followed Amazon, but actually appears to be providing some leadership itself, is Netflix. As you know, I have not liked Netflix for a long period of time, but finally the stock not only broke out over its HB3, which is 16 times book value, but did what I really like to see a stock do. It broke out and then it checked right back to the line and now looks to be advancing once again. So, click 1 for Amazon and 2 for Netflix, but what happened to the rest of the group? Well, Microsoft, as I mentioned to you last week, has continued to slip and slip perhaps all the way back to its HB2 price. I don't know whether that will happen or not, but again, as I warned you, when you have a stock price between 2 breakpoints, it is essentially a random walk as to which direction the stock chooses to go in. And it's only at the breakpoints that we actually get solid signals. So Microsoft remains in the FANG portfolio, but it has been slipping along with the market. Alphabet, well, here's really has been my favorite stock for a long period of time. And it got all the way up to its bubble price, that's 7.4 times its book value. And I thought, looked to be breaking out, and part of the reason I thought is because look at the nice acceleration of the earnings that was taking place. However, I should have heeded the lesson of Netflix, and that is to say, we get a breakout and we get a pullback, and then we take action. Well, we got a little breakout, but we did not get the pullback and the hold, and the stock has broken down below the line. For now, I am going to leave it because that nice Earnings acceleration hopefully will provide some support for the company, but from an SVA point of view, it's a warning. Facebook, well, look what happened. Peak at the super growth, peak at the super growth. Whoa, peak at the super growth again. I was perhaps lulled into keeping the stock instead of selling it at the super growth price. I was sort of lulled, I think, into keeping that stock in my Phantom FANG portfolio because, again, of its acceleration of its earnings and its fair market value. However, that has not proven to be the case. I would hope that maybe something like happened the last time that the stock reached its bubble price and set back. We got a nice rebound in the stock will occur, but right now we'd have to say that the stock remains in a downtrend. Finally, among the stocks that are in the Phantom FANG portfolio, as it were, Apple. And it looked very much to me as if Apple was breaking out at about that $150 mark. Adjusted for what I expected to be the revised book value of the company due to share buybacks, I thought, that the stock may be well timed. However, that has not proven to be the case, and the stock is actually set back to its HB5 breakpoint. At this juncture, it's a little bit below there, but we're getting fairly close to the next balance sheet. That's that little red diamond there, getting fairly close to the balance sheet. And we may well see that, in point of fact, that the stock is or has fallen to what may be its HB6. Okay, that is 33 times its book value. We'll have to see. For the moment, however, I think that we will do nothing about Apple and leave it in our Phantom FANG portfolio. Finally, Nvidia, which I haven't known what to do with, and I guess recently that's been a very good thing to happen because the stock has been sliding off. Maybe it will find its low at its HB4 price. That would be 20 times book value. I've shown not only Nvidia, but I've shown the some of the other semiconductor stocks in past FANG Friday webinars, and what stands out about most of those stocks is that they have been weak and heading lower. So I don't know whether Nvidia will be able to hold here. We probably will buy it if it gets there, but we will watch very carefully after that to see what happens. In summary, I have to say that the warning flags are flying, and there was more damage done to the FANGs overall this week. Although, as we saw, not in total. Amazon and Netflix have held in very, very well. My key takeaways for this week are, however, first, if the super growth price for the S&P were to fail to support the market, then we would fully expect that a full-scale bear market was in progress, and we would change from an investing mode to a trading mode in analyzing both the FANGs and stocks in general. Second, bear markets are only to be feared when you don't know what to expect and don't know what to look for. Such markets provide some of the best short-term trading opportunities that exist, and this is where SVA can really shine for you. Third, of course, in this event, your mindset will have to change its focus from the long term, which we've enjoyed over the past 11 years, to the short term, which involves a much more active approach to managing your portfolio. I must hastily add, however, that this is not now, but it may be closer than most people would like. For now, This has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.